Hey, welcome back. It's JWalter here. In today's video, I'm really excited to share this with you because I'm doing my monthly California housing market update. So the California Association of Realtors, or CAR, just announced December's numbers just a couple of days ago. So in today's video, I'm going to be giving you the latest update about what's really going on with our California housing market. And the best way to do that is to share my screen with you. So let me do that right now. And if you get any value out of this video, then please hit the like button. I greatly appreciate that, and also consider sharing this video too with anyone you feel may benefit from this video. With that said, let's go ahead and dive in here. So California home sales and prices moderated, keyword there, in December as mortgage rates edged higher, but home sales for the entire year recorded the strongest pace since 2009. That exceeded 2020's level by 7.9%. So let's first talk about home sales. I have a lot of graphics here to share with you here in just a little bit as well, but I want to share their press release here first with you guys. I basically highlighted at a high level what I thought was interesting and what I thought you guys would want to know about the market here. So anyways, December's home sale pace was down 5.4%. from 1 month ago. It was also down a pretty astounding 15.7% from 1 year ago. If you recall though, about 1 year ago, our housing market was completely on steroids. So comparing this year to last year is a little bit like comparing apples to oranges. So that's why I'm going to be sharing some stats about how now compares to 2018 and 2019. So stay tuned for that here in just a little bit. So the CAR president, who's the new CAR president of 2022, Otto Katrina, she says the imbalance of high demand and not enough homes on the market for sale is causing home prices to increase here, and also creating a very challenging market for home buyers too, right? For the year as a whole, the market turned into its best performance in more than a decade, again, back to 2009. All right, so California home prices. California home prices rose actually in December slightly from November. The median sold price in California right now is $796,000. The median sold price in the entire nation as a whole is around $360,000, if I'm not mistaken. So home prices here in California are quite a bit more expensive than the nation, of course. So home prices rose 11% compared to December 2020. So 1 year ago, we were at 717,000. Now we're at 796,000, just under 800,000. The annual increase was the smallest since July of 2020, though, as the share of high-end homes continued to moderate since July. I have a lot of stats to share with you guys because sales of luxury properties are really $2 million or higher really spiked last spring, and that caused home prices to increase greatly. Again, I have some graphics to share with you regarding that. So for the year as a whole, California set a new annual record median price of $786,000. So our median price for the entire year of 2021 was $786,000. That is a 19.3% increase from 2020. Pretty remarkable there. So regarding home prices, I actually downloaded this from the California Association of Realtors website. If you guys all know, I'm a housing market data nerd. And so I basically broke this down for you guys. I was looking at how now compares to the last couple of years. So this is the median sold price for single family detached houses in California. Again, $796,000. We had record high home prices in August. So the median price there was $827,000. That was an all-time high. And we have been decreasing, or since then it decreased for a few months, but then it actually increased slightly in December. But when you compare it to December 2020, home prices are up, or the median sold price is up $78,000. When you compare it to 2019, look at that. Our median sold price in December of 2019 was only $614,000. That's a difference of $181,000 when you compare December 2021 to December of 2019. Pretty remarkable. I think this is going to be creating some affordability challenges, especially if mortgage rates continue to increase. More on that here in just a little bit. So CAR Vice President and Chief Economist Jordan Levine had this to say: with COVID cases surging and inventory constraints remaining an issue, also we have very low housing inventory, the housing market will see headwinds of ongoing high inflation, which will put pressure on the Fed to raise rates sooner than previously expected. They're expected to increase the federal funds rate potentially in March, or at least the first half of this year, and potentially increase up to 3 times this year. And that could translate into higher mortgage rates. There's not a direct correlation to when the Fed increases or decreases the federal funds rate, but there is an indirect correlation though. So these factors will increase the cost of borrowing and put more affordability burden on potential home buyers who want to purchase in 2022. As I've been saying though, as mortgage rates increase, your purchasing power decreases, right? So if mortgage rates increase 1%, your purchasing power decreases by 10%. So if you were pre-approved for $1 million, then now you're only pre-approved for $900,000 just because mortgage rates have increased about 1%. All right, so let me share some graphics with you guys because there's some really good ones here. This used to be 60 pages, actually whittled it down quite a bit. I want to show you at high level what was most interesting to me, what I think you guys would want to know about. All right, so here's the California housing market at a snapshot for December 2021. So home sales are actually decreased by 15.7%, but on a compared to 1 year ago, they increased 7.9%. The unsold inventory index, we haven't talked about this, but the 1.2 months we see right here is a reduction of 14% compared to 1 year ago, and 1.2 months is an all-time new record low. So we never had inventory being this low. Again, 1.2 months means that it would take only 1.2 months to sell all the houses that are listed for sale in California at the current sales pace, assuming no new listings were to hit the market. If we want a more balanced real estate market, this number needs to be 4 to 6 months. And we've been having this number of less than 2 months for a very long period of time. So we are not even close to having a balanced real estate market, let alone a buyer's market. If we want a buyer's market, we need about 6 months or more. So we have a long ways to go. Median days on the market is 12 days. So on average, it takes about 12 days from when a seller lists their house for sale to when they accept an offer from a home buyer. Only 12 days on average. And that's an increase actually compared to 1 year ago. All right, let's talk about home sales. This is home sales over the past, 15 years or so. Obviously, during the Great Recession, we had a big decrease of home sales from 600,000 all the way down to 200,000. I think this is analyzed numbers here, if I'm not mistaken. Any case, home sales have been decreasing more or less for entire 2021. And this is partly due to the fact we have a low inventory, and I'll share that more numbers regarding that. Also, I thought this was funny. Sales gained solidly for the year despite slowdown in H221. Must be a typo. If you guys know what that is, let me know. H221. I'm guessing they mean 2021. I don't know. All right, so sales dipped further. Biggest drop since May of 2020. So we had this big decrease on a year-over-year basis of 15.7%. Again, the housing market in the end of 2020 was really on steroids. So it doesn't really surprise me too much by we have a decrease of home sales compared to 1 year ago. But if that continues to decrease as we approach or as we go into the spring and summer months, obviously that's going to be a concern, right? Here's something I also found to be interesting as well. So this is a sales by region. So they break up the state in several regions. But look at that. Southern California made up about half of all the home sales in the entire state. Central Valley was 22% and San Francisco Bay Area about 17%. So here's what I'm talking about. The upper price segments are moderating at the year end. So last spring was really the most crazy I've seen our housing market ever here in the Sacramento area. We saw a lot of luxury home sales and a lot of home sellers getting multiple offers, homes selling for hundreds of $1,000s over the asking price, and buyers waiving all their contingencies, even though they don't even have inspections in hand. It was absolutely nuts. So in any case, sales of over $2 million spiked over 300% last spring, but they have been decreasing, and this is why I think that home prices have been a little bit moderating as well. But we still have elevated levels in the luxury market though. So this orange line is sales of $1 million to $1.99 million houses, and then the blue line there is home sales in California over $2 million. So they have been decreasing, but we're still at higher levels compared to other price segments though. So take a look at this. So the sales in December 2021 compared to December 2020, that is home sales of over $2 million increased by 22% compared to 1 year ago. Sales of 750 to 2 million were more or less flat compared to 1 year ago. But look at the more affordable market. The home sales of less than $300,000 is basically non-existent in California, or very, very low numbers, because we're down 52% compared to 1 year ago. And this is, of course, because home prices have increased so much. We're not seeing a lot of houses in the lower range market. And this is a big, big issue. Also, the share by price segment. So this is the percentage that has sold by each year. So the dark blue line here, or purple, whatever you want to call it, is 2021. More or less the same in the range of $500,000 to $999,000. But $1 million, we had 26% of all the sales were over $1 million compared to 22% 1 year ago. And then really on the more affordable range of less than 500,000, we went from 37% 1 year ago to 28%. Again, you can see that here, the spike of luxury market sales was actually astounding here. What's really caught my eye, though, is that we were seeing this gap between the low end and the high end. So the COVID outbreak was around March-ish that really affected our market in 2020. This blue line here is home sales of less than 500,000, and the green line is home sales over $1 million. Ever since the lockdowns were lifted, the sales of $1 million plus houses increased greatly until really the March or springtime of last year, when they started to decrease. So right now we're at, let's go back. So during the pre-COVID, let's say January 2020, sales of less than 500,000 represent about 45%, just under 50% of our market. And then we look at home sales of $1 million plus in January 2020, it was about 15%. Now they're about equal, which is pretty astounding. So what we're seeing now is sales in the lower range market have been decreasing, but they been increasing, whereas sales in the luxury end market increased greatly, but they started to decrease. And now we're at more home sales of less than 500,000 compared to $1 million plus houses. So pending home sales have been decreasing by double digits for a long period of time now, really ever since the summer months of last year. So pending home sales are down almost 20% compared to 1 year ago. And this is really going to affect home sales in the next couple of months because, as you guys know, once a seller accepts an offer, the home really typically sells within about 30 days. So if the pending home sales decrease by 20% in December, we could expect home sales to decrease further in January and potentially in February. We'll have to see. So let's talk about home prices again. Home prices are right now at $796,000. We did see a giant increase ever since this pandemic hit, a big increase in 2020, and then a really big increase for the first half of 2021. We did see some typical moderation or seasonal slowdown in the second half of 2021. Which, as you can see, almost every year we see that, right? 2013, increase, decrease, up and down, up and down, up and down, up and down. So it's pretty remarkable that we're still have some seasonality in market, but it still remains very, very competitive. And I'll share some stats with you right here. So this is a sales price to list price ratio. This is the percentage of houses that are selling over the seller's asking price. So in December, that ratio was 101.2%. That means on average, for December at least, houses were selling for 1.2% over the seller's asking price. So we're at levels of over 100% for much of 2020. Actually, I think all of 2021, actually. And then before this, though, in 2020, let's just call it 2019, we really didn't hit any levels where during any month where the sale to list price ratio reached over 100%. So it was more normal pre-COVID that houses sold for slightly less than the seller's asking price, as you can see here below this dotted line here. Here's the share of homes that sold over the asking price, actually dipped below 60% for the second consecutive month. But when you look at historic trends, it's really remarkable how elevated our market is right now. When you look at this, you see, oh gosh, the percentage of sellers are selling over the asking price has been decreasing. The housing market's crashing. But when we look at the historic averages, this is very normal for that percentage to peak in the summer months, as it did in 2017, as it did in 2018, as also in 2019. But look at 2021. So this is December, 58%. This means that 6 out of every 10 houses sell for over the asking or sold over the asking price in December. When you look at December of 2019, it was less than 30%. So right now we're at almost twice as high levels compared to pre-COVID, really. So here's some regional stats I want to share with you guys. This video is going to take a little bit too long, so I'm going to break this video up into 2 separate videos. I'm going to be sharing all the regional stats here in a separate video. I have a lot to share about how each of the major regions and also each of the major counties in California fare. But here's one slide I do want to share with you about how each county fared in regards to houses that sold for over the asking price. So it's very common to have Bay Area counties such as Alameda and San Francisco, for example, where it's very common for houses to sell for over the asking price. And you can see this here. Alameda County led the pack. 83% of all the houses that sold in December sold for over the seller's asking price. I don't know why it is, but it's very common in the Bay Area for real estate agents or sellers to list their houses for far less than what they're going to sell for. It's also we all seen the headlines where houses sell for over $1 million than the asking price. So that's just kind of been the norm for many years here, that for whatever reason, homes get listed for far less than what they're going to sell for. In any case, let's take a look at these other counties here. So most of the counties here sold for over the asking price. But on the bottom end of the market, look at this. Siskiyou County, only 18% of all the houses that sold in December sold for over the asking price. And also very low in Lassen, Plumas, Mono, Tuolumne, Glen, Lake, and Mariposa counties, for example. All right, talk about inventory and active listings. The big problem of our housing market in California is not outside that issue. So inventory dropped to its lowest level in recorded history. We're at 1.2 months, which is the lowest we've ever had. When you look at the past couple of years, or past few years really, January 2019, we're at about 4.5 months supply. Now we're at 1.2 months. So in January 2019, we really kind of more or less had like a balanced real estate market, and that was because interest rates increased to almost 5% by the end of November of 2018. But what happened after that? Mortgage rates dropped big time in a short period of time. So mortgage rates increased about 1% at the tail end of 2018, but in 2019, mortgage rates decreased greatly, and that caused housing demand to increase and therefore inventory to decrease. And we've seen this ever since really 2019, where inventory has been dropping to very, very low levels. One part of housing inventory are active listings. This means basically housing inventory, the total number of houses available for sale in California. So they break this down by the month. So in December, we're at very low levels compared to any other month over the past several years, especially when you compare it to 2019, right? December right here, we're at less than 20,000. In December of 2019, over 30,000. And the same in December of 2018, we're at over 40,000 houses that were for sale. That's housing inventory. That's how to look at the number of new listings. This is when a seller lists their house for sale. So new listings are continuing to drop. So new listings, we only had 10,478 new listings in December of 2021. Compare that to 1 year ago, 13,000. And then 2 years ago, 11,200. So this is part of the problem, right? We have high buyer demand, which is depleting the inventory that we have, but we're not refilling that bucket with new listings as much as we need. We need a lot of new listings to hit the market in order to balance out this market. Another issue we have right now too is the number of home sales has been far greater than the number of new active listings that are hitting the market. So we're seeing more sales than new listings that are hitting the market, and that's really depleting housing inventory. And this is especially true in December. Take a look at this. We had 23,000, almost 23,000 home sales in December, but we only had 10,500 new listings that month. So basically we had twice as many home sales compared to the amount of new listings that hit the market. And this is why we're having this big imbalance with our housing market, right? All right, so let me wrap this video up here in just a little bit, but let's talk about a market competitiveness. This is the days on the market. Again, days on the market is when a home seller lists their house for sale to when they accept an offer from a home buyer, and then the house ultimately sells, usually in about 30 days in California. So time on the market hit 12 days. This is at very low levels compared to historic trends. As you can see here, historically, it's very common to be over 30 days or over 20 days, but right now we're at very low levels. However, it's been increasing. We'll have to see if this continues to increase. It's very common for days on the market to increase during the winter months because home buyer demand tends to slow down. So we'll have to keep an eye on this and see if this changes over the next couple of months here, especially as we go into the spring and summer months, right? So let's talk about the number of home sellers who are reducing their asking price. So out of all the houses that sold in December 2021, only 21% reduced their asking price. So right now, very low levels. You look at, here's basically all of 2021 is at far less levels than we've seen in many, many years. So on average, sellers are selling their house for over their asking price, and they're not doing any price reductions. I would imagine we'll have this number still remain very low unless we have a big influx of housing inventory. Time will tell. Anyways, that's today's video. This is a longer video, and I want to share all the regional stats as well, how each of the major counties in California fare. So I'll make a separate video regarding that, so stay tuned for that. Anyways, if you're still watching this video, then thank you so much for your support, and also hit this like button and share this video with anyone you feel may benefit from it. Hope you have an awesome day. Look forward to seeing you on the next video.